Welcome back to ICT Trading Concept. When I have tweeted that when market will take some kind of obvious liquidity, you have to wait for price making another obvious liquidity. Okay, before that you shouldn't take your entry. Now here I was in live, so whatever I have done over there, that is not. I don't think I should have explained this one because I have already explained. I did this thing in live in front of you, so I'm not going to talk about here. But let me go to the 15-minute chart one more time, and from 15-minute chart you can see price made this relatively equal lows, so that low and that low that has made relatively equal lows. In the meantime, price went higher at the launch hour. It went and take the liquidity from there, and the buy side liquidity. I believe market should expand lower now. I'm going to 1-minute chart one more time. So here's the 1-minute chart, and from 1-minute chart it has taken all of this buy side liquidity. Say all of this buy side liquidity has taken by that run. Now I need a very nice or clean market structure shift. If I get that, then I have 1-minute sell side liquidity here and the 15-minute extreme liquidity over there. Okay. Now this swing low has traded this fair value gap. I see this candle low and that candle high. There is a fair value gap. So this low, this swing low has traded that fair value gap. If I get a displacement which will go through this swing low, and if there is a fair value gap, then I will take my entry over there. So this will be my target. This sell side liquidity will be my target. I don't change my things. Okay, this is my extreme sell side liquidity. I'm not going to hold my trade until this extreme sell side liquidity. My expectation is market is going to take that sell side liquidity, but I will stop my trade or I'll kill my trade over here to 1-minute sell side liquidity, because that is obvious. This sell side liquidity actually it will call the price to come here. When it will start to fall, it will take this sell side liquidity at least. After that, it will take that one or not, that is different matter, because there is one fair value gap. It can come to this fair value gap, then it can go higher one time, or any kind of consolidation, as we have news at 2 p.m. I think the FOMC. So for the FOMC news, it can make this liquidity more stronger, so that it can take it through. Using the FOMC. That's why I'm not going to hold it, and even I really don't love to hold my trade for the extreme liquidity. Okay, I love to mark some kind of liquidity that is more obvious from 1-minute chart, and I determine my bias or my direction from the 15-minute liquidity. So this is the way I do trade. Now I have to wait for the market structure shift. If I don't get the market structure shift, I will do nothing. I have nothing to do. I believe I will get a market structure shift over here with a very nice fair value gap, or maybe a breaker or anything. I'll look for the price, then I'll try to take my entry over there, and that will be my target. So this is very simple, guys. I told you something, I gave you some rules. If you follow them, I believe it will be easier for you to be the winner. Okay, now it's up to you. If you are willing to be the profitable trader, you can follow the rules. I'm not telling you that you have to follow my rules. Whatever I'm telling you, you have to follow them. No, I'm not telling that. I'm just telling you, please make some rules and follow them. If you do that, there is nothing that can stop you from the profitable trade. Okay, trust me. If you don't follow the rules and if you do trading randomly, it's really so difficult to be a profitable trader or a consistent profitable trader. So it's up to you. If you want to be a consistent profitable trader, you have to make some rules, or you have to follow some rules. Otherwise, it's really so difficult. So difficult. So I will see how it close. If it can close below that swing low, and if it can make some kind of fair value over there, that is my expectation, and that will help me to take my entry. Okay, and I can see it has actually came to this volume balance over here. Share market. This is a very nice volume balance. So price actually trade that volume imbalance, and now it went through this. I have to wait. Patience are the most important part of this industry. If you are impatient, then there is much more possibility that you will take losing trade comparing your winning trade. Okay, so I just can't take an entry because I'm expecting price will go lower. I have to wait for the price because it has to show me some kind of, what to say, I mean the some kind of sign that it would love to go lower. Until now I didn't get anything that is telling me that market will go low. Okay, if you see the other way, you will get that it has taken the sell side liquidity over here, very clean sell side liquidity is taken, then market structure shift. Though it didn't actually trade the fair value gap, but it has traded this breaker. It came to this breaker and then it went higher. It has taken the buy side liquidity. So when it has taken the buy side liquidity, you have a fake clean buy side liquidity over here as well. I mean those highs, all of these are fake clean buy side liquidity. In the meantime, it has traded this fair value gap, so it can go high now. Okay, it can go above and take the buy side liquidity now. So I just can't do gamble over here. But if I see any kind of sign that is telling me that market will go over there, maybe I will take entry for the buy side liquid, though I don't want to do that. To be honest, I really don't want to take a buy. But if price shows me that it would love to go higher, then maybe I will take a buy. Right now, if you ask me, gun to my head, I would love to see the lower run. It will take sell side liquidity here and here. The only thing I want to see, okay? So right now I need a very nice displacement. Let me go to show me. Okay, so here is the immunization piece. So I would love to see the immunization piece as well. I think I have the SMT over there. No, I don't have any SMT over there. Let's see how it works over there. Okay, I have to observe this one first. Let's see how it works. Okay, first thing first, I need a market structure shift. It came to the volume balance one more time. That is the volume balance. This candle high and this candle low. There is no body, so that is the volume balance. So it has traded that volume balance, then it expanded lower. This consolidation, okay. And if you see the bull plug, you can see like that way. Okay, price went higher, is consolidating. Little trader, they are thinking, okay, market will go high, and this time they're right, market went higher. Then again, it is started to consolidate. I don't believe that this bull plug will work as well. Okay, I don't believe that. I don't want to see this will work again for the retail trader. If it works again for the retail trader, most of them will be the profitable trader, though I don't want to see that. Okay, that's why I want to go for the short. Everything is relative. If you can't actually change change the concept, or you can't just take a decision without thinking the retail perspective. You have to think, or you have to um, observe the retail thinking in your mind. Retail trader, they are the liquidity, they are the obvious liquidity. Okay, so let's say it's going lower. I need some kind of displacement. I need a big run. Okay, without big run, nothing is certain. And this is the way I wait for the trade. Okay, I have an expectation that market will go lower. I am waiting for the price action that will tell me that I am willing to go low, and then only then I will jump for the trade. If it doesn't work with my expectation, then I will judge my expectation after a certain price action. If I see some kind of price action that will tell me obvious price action that will tell me that market is actually going opposite of my expectation, then I will change my expectation. Then I will wait for I will wait again for the price action. Okay, but rarely I change my expectation. Very rare I change my expectation. Most of the time I try to hold my expectation, and if it works I take entries. If it doesn't work, then I do nothing. See the consolidation here, over here, it is actually making some kind of liquidity. I believe it will take the buy side liquidity first, and it will go higher, and it will take the buy side liquidity, then it will give me the market structure shift to the lower part. And in the meantime, real trader, they will be stopped out, so nobody will be willing to take the sell, and at that moment I will take myself. If this run has done already the higher run, I'll be happy to see that. All I need a displacement that will actually shift the market. If I get that, I'm happy to take myself. Let me actually check how many handle do I have over here. So it's near about 22 handle. Not bad. It's not bad. So price is going lower one more time. No parallel gap. Okay, so it has taken the sell side liquidity from there. So sell side liquidity has taken already. Let's see how it works. Look at the S&P, what it is doing. It is also actually going higher. I mean, this S&P price has taken the sell side liquidity. It failed to take the sell side liquidity. Okay, this is kind of sign that market would like to go lower, because uh, S&P is relatively stronger when it is falling, and Nasdaq is weaker. So she is the weak sister, and she's, I mean, the sick sister. She's the stronger sister, or the perfectly okay. Okay, she's perfectly okay. When the weak or sick sister is willing to go low, it should expand lower as well. Okay, this is the logic for the SMT. Now, when I saw this, I mean, the low, I'm not thinking it is going higher. This SMT is not telling me that it is going higher. Instead of that, I'm thinking it will go low. Let's see how it works. Waiting, waiting, and waiting. When I started this journey, I mean the trading, trust me, brother, when I have just started this thing, okay, this concept, I I wasn't able to wait for the setup. I started to I always try to how to say, I was impatient, okay. I thought, okay, if I don't take my entry here, then I have to take my entry over there. Then my profit will be very small. Okay, it will small it will make my profit smaller. So I have to take my entry over there. And not some, most of the time, I was the price hit my stop loss and I took loss. Then everything just I couldn't able to read the price. It is disgusting, to be honest, brother. So slowly I have learned that how to wait for the setup, and finally now, not always, but most of the time, I wait for the perfect setup. Then I jump for the trade. Until then, I wait, and I wait. See, over here I'm waiting. Okay, this consolidation I'm not doing over here anything. But if I was the one before 3 to 4 years ago, I would take my entry over here. I would force market to give me the entry. Maybe I would take my entry to this water block. I would do that, and yeah, I would have done that already. But here, the older one, I'm waiting. I'm waiting for the setup. If I miss this this trade, I'll be happy. No problem. It's okay. I have just missed one trade. Nothing. That's not. That doesn't mean that everything's lost. Okay, so press came here. Let's see this time it can give me any kind of uh fair look up or not. Okay, I would love to see over here as well if it can shift the market over there. That is more confirmed price action. I mean, if it can shift over there, I think I'm going to get a fair look up over here. I think that. Let's see if it can give me a fair look up or not. So there's one fair look up over here. Okay, you got my logic, guys. I believe that you got my logic. So now look at the price for EMIN-S&P. He's willing to go low now. Okay. In the meantime, Nasdaq is also willing to go low. So both of them are showing me that they would love to go lower, and EMIN-S&P is going to take. Okay, I'm going to sell here. So that's my sell, and my stop loss will be just above here. I'll target to this low. I mean, this sell side liquidity will be my target. It's very small. So, I mean, very small trade. Let me actually mark the thing over here. I think it's kind of it's 1700. Okay, no problem. But I don't want to. Okay, I can put it over here to this level. Okay, just below the sell side liquidity, there is the only fair value gap. So if price can take that sell side liquidity, this fair value gap is more obvious. So I can't go for I can go for that fair value gap. So if I go over there, I hope it will be 20 handle, something like this. Let me actually check it on my time. Yep. So it's exactly 20 handle. Okay, I'm happy to see that because this fair value gap is very important for me. Though I believe market is going to take that sell side liquid that has made from 50-minute chart, but it can take that sell side liquidity by using the FOMC news. Okay, so I'm not going to hold it until then. Instead of that, I don't need this one. Instead of that, I will go for this obvious liquidity, and as I have put my traded profit over there because of this parallel gap. So that is the logic for doing this thing. And now if you ask me why is my market structure shift, yeah, all of these lows, I got my market structure shift over here. Okay, when this low has shifted over there, I got my market structure shift over there, and that volume balance should be the entry point. Okay, but it is too risky for me, so I wouldn't take my sell over there. Instead of that, I was waiting for this run. Look at that run, very strong run. Now why price is consolidating over here? Let me show it to you. Okay, so there is fair value gap. So price just came to this fair value gap. When it has come to this fair value gap, it is just giving me some kind of reaction. Okay, this kind of reaction, because this fair value gap is the last fair value gap from that long run. This is the last fair value gap. I believe price will go through that. Now, is it going to use as an inversion fair value gap? No, this is not going to use as inversion fair value gap. But if you ask me, brother, are you looking for this type of things? Consequent investment rejection. then it will go lower, trade the lower part and take the sell side liquidity. Yeah, it can do that. It can do that, okay? But I'm not expecting this as work as a inversion fair value gap. I don't want to see this fair value gap as a inversion fair value gap. All I want to see, yeah, I am getting some kind of reaction when it came to this fair value gap. That's okay. That's perfectly okay. But I want to see it will go through this fair value gap and it will keep falling. Okay, it will just keep falling. Take the sell side liquidity. I don't want to see any kind of setup over here. Nothing over here. I don't want to see anything over here. I just want to see some kind of fall. This is the reaction from the last fair value gap. It's okay. I'm not afraid, or I'm not thinking that market is going higher and it is actually coming to that price liquidity. I'm not thinking like that way. Why? It's because the 15-minute fair. I mean, from the 15-minute chart, I got this liquidity. Price has made this very clean liquidity over there, and from 1 minute chart, there is very clean liquidity as well over here. So this is the last fair value gap from this big run. So I am thinking price is coming over here. Okay, so price came to this order block level. That's okay. It's okay. It's perfectly okay. It came to this order block level. Okay, no problem. Now, now is the time it should go through this fair value gap. It shouldn't respect this fair value gap anymore. It shouldn't do that. It just go through this. It has to go through this. No respect. I mean, no respect. I am not looking for any kind of respect from this fair value gap. Nothing. It should go through this. If it is not going through this fair value gap right now, then I'll be in tension. I'll be in a big tension. Okay. See, it is going higher. This is kind of the tension. It shouldn't do that. It shouldn't do that. It should just go through this fair value gap. Why? Why it should go through this right now? Because when it was reacting from this fair value gap, that was okay. Why that is okay? Because that is the last fair value gap. I will get some kind of reaction from that fair value gap. So it was just respecting that fair value gap. Then it went higher to a certain level, this water block level. When it came to this water block level, that means price went higher, respected from a certain level, then come back again to this fair value gap. Now it shouldn't respect anymore. It has done its job. It hold the price, send it back to a certain level. Now price should go through this if it would love to take the sell side liquidity. Otherwise, if it continuously respect this fair value gap, there is much more possibility that market will go higher. Okay? This is the concept. This is the thinking. This is the price action. That's why I am telling you, I don't want to see the respect right now. I want to see some kind of clean run through this fair value gap. Clean run, not Mickey Mouse move or something like this. Just a clean run. So many things, right? But it is what it is. You will understand this. Trust me, brother. But yeah, obviously everything needs practice. Practice makes a man perfect. You have to practice. You have to remember these things. Maybe you can write it down. I mean, that is the easiest way for me to remember something. I always try to write down when I get something. I write it down. Okay. See the reaction from the consequent encroachment. It's not good. It's not good enough. I mean, price shouldn't do this. It should just go through this fair value gap. It should see that level as like as there is nothing, no fair value gap, no water block, nothing. But it is respecting that area. That is my thinking that why it is doing that. There is another reason it is doing that like that way, and that is 130, because the 130 is kind of 830. Okay, I mean at 830 sometimes you will get some kind of volatility without any news or anything, you will get some kind of volatility at 8:30 because that is the uh, opening of the morning session. So it's kind of the opening of the PM session, the 1:30. So at that time we get some kind of volatility as well. So I think it was doing this because of 1:30 opening. So this is the 1:30. Let's see how price react right now. Okay, see the reaction from 1:30. This is the reaction from 1:30. So it came to the constant closement of this parallel gap. It's good. It didn't break this parallel gap. I love to see that. I'm happy to see that as I have already taken an entry. I will love to see that. But if you ask me, there's there is possibility that market can come to the mean threshold of this order block. Okay, so let me mark it. So I don't want to see that, but it can come over here to this mean threshold of this order block. I don't want to see that, but it can come. So 1:30 has done. I mean, this is 1:31. Now there is nothing. There is no reason for this kind of reaction. Okay, no reason at all. It should go through this right now. There's no reason for this type of consolidation or reaction from that fair value gap. If market would love to go and take that sell side liquidity, it should give me some kind of clean run. See the reaction? It's not it's not good enough. It's not good at all. Okay, see this run. I want to see this type of run. Body should close below this fair value gap. It should close below that and then just go through everything, take the sell side liquidity. I would love to see that. So what I told you, this was the 1:30 candle. So after rejecting from the order block, when it has been rejected from that order block, I wanted to see some kind of this run, okay? But I didn't get it because I was very near to 1:30 p.m. and 1:30 p.m. is kind of 8:30 opening in the morning session. So this is the opening of the PM session 1:30. That's why we get some kind of volatility, little volatility from 1:30. That was the reason for this type of reaction. And then 1:30 I got this run. After that it's going higher again. I really don't want to see that body close above this family gap. I really don't want to see that. No man. That will be outside of my expectation if body close above this family gap. Then I'll think, okay, maybe I'm wrong. Maybe I'm wrong. Because this family gap shouldn't respect, it shouldn't work as a support anymore. It should not do that. If it do that, I mean, if it work as support, then it will be, I mean, it will reverse. It will fail to send back price to for the sell side liquidity. Okay, I mean, not fail. It will hold the price then. Then I will think this is the fake breakout. If it start to work as a support, then I will think this is the fake breakout. Otherwise, still I'm thinking market will go low because I'm watching the bodies right now. The bodies are not closing above the consequent encroachment, but yeah, it can close above the consequent encroachment, no problem. But it shouldn't close above the high of this parallel gap. Till now, I didn't see any body close above the consequent encroachment. That's a good sign. I really love to see that. Please go through this. It should go through this. This sell side liquidity is more obvious. Okay, whatever price would love to do, it can do, but it should go through this sell side liquidity. Now, when price will go below that low, okay, it went below that low, so this is the time I should put my stop loss to the break even. Now, if I would take two contract entry, then I would take a partial over there. Okay, try to understand, brother. If this is a one contract, see, I have no chance to take partial over there. This is the time to take your partial. this is the perfect place to take your partial. As I have only one contract, that's why I put my stop loss to the break even and I'm unable to take the partial. But if you have taken 2-3 contract, then that is the perfect place for taking the partial. If it went below that level, I mean this sell side liquidity, I'll put my stop loss just here. I mean, okay, so it went here. This is the time to put the stop loss over here. Why? Because this should act as a breakaway gap now. I mean, this fair value gap, not that one. This one. This one should act as a breakaway gap. I took a great risk because I put my target over there just above this fair value gap. I believe market will come at least to this fair value gap. But if it failed, I'll be happy to be stepped out over there, as I don't have any opportunity or any chance to take partial, and I didn't target this sell side exact sell side liquidity. Instead of that, I target this last fair value gap. So if I missed, I mean if price missed for one tick my target, I'll be happy to be stopped out with a little profit. How much it will be? How many handle? It's kind of 900. Okay, no problem. I'll be happy with my 900. But I really want to see that market will come to this fair value before going. If you would like to go a little higher, it should go after trading this fair value gap. Then it should go higher. Okay, that is my expecting. Why I put my stop loss over there? Because this should be the breakaway gap. Price shouldn't go to that level. That breakaway gap shouldn't be traded. There's two fair value gap, so it has traded this fair value gap. Okay, no problem. I'm happy to see that it has traded that fair value gap, but it should not come over here. If it come over there, I'll be stopped out. No problem. So it touches the lower part of this breakaway gap. I'm happy. Still now I'm happy. Am I wrong? I don't think so. I'm wrong because I knew it will take that sell side liquidity and it is paper money, so I took a little more risk. But if it was my real money, I'm already stopped out. I mean, I'm already my target profit has already hit it because I target that sell side liquidity. So I'm stopped out. Okay, no problem. Uh, you see it went to the consequent enforcement of the breakaway gap. Okay. So that's all for the setup, and I have explained everything. Okay, everything. And see, so that was the first loss, and then I mitigate my loss with profit. I explained this two setup in live. That was gambling, but this one is the perfect entry and perfect sell side liquidity, perfect way to take entry. Everything is perfect over here. So if you watch this video perfectly and if you try to understand how to read the price, I hope it will help you. Okay, trust me brother, it will help you. So that's all for today. See you guys. Bye bye.